Hey, this is June from Turning Point Life Investment, and this video is for the week ending in January 17th, 2009. So starting with the SPY 3-year weekly view, let's take a look at what's going on this week. We had another down week. Okay, what I want to bring to your attention is notice how we've broken down from this, I would say some kind of channel, wedge, whatever you want to call it, but this is a consolidation pattern, right? It's consolidating for whatever happened here with this decline. And notice how we managed to break down from that this week. Very similar to what happened prior here, where this consolidation consolidated for this decline. And we had a similar pattern, some kind of wedge rising channel. And once again here as well. Okay, so notice how patterns do repeat themselves. And if this pattern has any predictive value, it's possibly telling us that we have a possible start of a new leg down. Okay, I do believe we still have one more leg down for this market before we get a nice rally, possibly into the end of the year. But before that happens, there's still one more leg down, possible one more leg down, breaking the prior low right here. Okay, so whether this is it or not, that I don't know. But what I do know that the market has turned a little more bearish than what it has been for this last past month. Especially since we had a nice pickup in volume right here, as you can see. Going into a 6-month daily view, well, what was critical about this week is we managed to break underneath this support right here at $85. Okay, that held up as relatively good support for a good 3 retests, as you can see here, but we actually managed to break underneath it and retesting the support here back in $82 back at the December low. Okay, so 82 is building up as critical support. If that breaks, then most likely, well, I wouldn't say most likely, most definitely I would say we will probably come back and test the November lows if 82 breaks. So I just took away the studies so that way you can see the price better. Okay, price should always be your primary indicator. Now, those other stuff, stochastic, MACD, RSI, whatever you use, those are always secondary. This should always be your primary. Notice how with this candlestick we have a long-legged doji candlestick. Okay, that's a bullish reversal candlestick, especially when it comes down or after a decline. So we have a potential relief rally going on. The only question is how far will this bounce, right? How high will this bounce? So that's where we have to kind of look at where are the next potential resistance level that we can see the market stopping at. So going into an hourly view, I'm going to keep the studies away because they really don't tell us a whole lot right now. Notice how we managed to retest this resistance or support right around the 86 area. Okay, there's a nice gap right here. Gaps act as really good support and resistance, and in this case it will be acting as a resistance. So the entire length of the gap, especially the top and the bottom, are pretty good resistance and support. We did test the bottom of the gap right here around 86. If this has another push higher, probably 87 will be your next possible resistance. If we do get a little bit higher, I would say 90 is probably as high as you can go. So look for these possible levels. If 87 breaks, look for 90. But watch the weakness in the market. Okay, if there's any sign of reversals around these levels, those are good indications to go short in the market. Whether you do SPY or certain stocks, always follow the market. If you see some kind of reversals around 87, then maybe that's a good time to go bearish. Next, I want to talk about the VIX a little bit. Now, notice how I drew a rising or declining channel right here. Okay, see, this is kind of a consolidation pattern for the VIX. We had a nice rise in the VIX, and now it's consolidating. So consolidation means that it's correcting for whatever happened here. Okay, if that is the case, that means when this consolidation ends, guess what? The predominant trend will resume, and in this case the predominant trend right now is up, at least for the VIX. So if the VIX goes up, that means the market will most likely go down. And that's why I feel, going back to what I said in the beginning, that I still feel there's one more leg to go, simply because other than looking at the price of the market, but the VIX is also telling me that this consolidation pattern is just consolidating what's happening or what happened before, and there's a nice possible breakout higher. It's just a matter of when. So for triangles, there is typically a typical triangle has 5 legs. Okay, so we have 1, 2, 3, 4, And guess what? We're probably starting a fifth leg. Okay, so we have a nice rally in the market. The relief rally probably can push the VIX a little bit lower back down here. If that is the case, and if this is a typical triangle, then that should complete the triangle. And any rally in the VIX will mean the start of a new leg lower for the market. So I'm expecting this to happen within a month or two. Um, Obviously, depending on the speed and severity of the market, but nonetheless, we're getting closer to the apex of this VIX, which means that the market is pretty much reaching a point where it needs to expand in either direction. Okay, because the market's been side trending and consolidating for a while, so some kind of expansion is bound to happen sooner or later, and more likely sooner than later.